Hey everybody, it's been a while since I posted a video, and quite frankly, I'm sitting behind my desk this morning and thinking, there's a lot of stories being pushed out, a lot of negativity being pushed out from the media, and a lot of it is primarily due to interest rates and rising rates and the affordability of houses and the affordability of debt. And although that's a whole discussion on its side, where I see there's actually a lot of opportunity to spin some positivity, especially for those who are looking to buy for the first time. I dealt with a lot of clients over the last 1 or 2 years that just struggled getting into a house, whether it be homes are selling for $150,000 over asking, or you're competing with 50 different individuals. A lot has changed. And the unfortunate reality is that a lot of people are sitting on the sidelines because, well, rates have increased so much. So I thought rather than sticking to the typical script of yes, rates are high, so everything must inadvertently be also high in terms of carrying costs, we'll flip it on its side and say, hey, you know what? Let's look at the actual numbers. So I've presented some data over social media, and I believe I had an email campaign as well. It was a static image, and although the numbers were explained, nobody kind of walked through nobody walked through the actual numbers. And so although I'm very well versed on this discussion, it may not be as easy to interpret for others that are not. So I thought, let's put a quick video together and walk you through those numbers. So I'd like to thank our good friends at RMG Mortgages that shared this calculator with us. And let me kind of walk you guys through this. It's actually some pretty fascinating differences here. So what we have here at the top left corner, this is a market comparison, essentially showing the differences from where we hit a peak in February, March of this year at $823,000 average sale price. We are now in, well, these are as of October because November hasn't come out yet, but we're now at an average value or average purchase price of about $640,000. So where rates were hovering low 3%, which a lot of people were jumping on, we're now at 5.25. So clearly that's a substantial difference. And so a lot of individuals are assuming, well, it's not the best time to get into the market. The rates are too high. I'm going to clearly pay more. The thought here, in fact, is that because the rates are high and so many people are kind of holding back, houses are sitting. And unfortunately, for those trying to sell, it's not a great environment to be in. But for those trying to buy, it is a good opportunity. You're not dealing with as much competition. You're dealing with a little bit more of scarcity in terms of individuals going out looking for homes. And so when you look at it actually from a number standpoint, here's a breakdown. So when you're looking at March, and we're talking about, we're trying to compare apples to apples here because this is arguably the same house in February, March today, right? Adjusted values. To buy that same house with a minimum required down payments several months ago, we're talking about 57 grand down to now 39 grand. The mortgage, therefore, for the same purchase, same home, arguably, 766 now down to 601. The difference between these purchases is significant in my mind, and it's an opportunity. And I think more people need to be aware of these numbers because we are comparing truly an apple to an apple, despite the fact that some of the numbers, the interest rate and some of the other numbers are different. You're still looking at arguably buying the same house, but a lot more money staying in your pocket. And to take a step further, if you had 60 grand, 57 grand plus closing costs, let's say, all the more reason to have that availability to either, reduce the down payment required to keep it in your pocket for improvements to the home or debt consolidation or future investment, whatever the case is, or you actually now can increase your down payment. So you're buying the same house, maybe you keep your down payment consistent, which only makes your overall numbers that much better. So we're talking about a difference of a total mortgage. Difference was, what was the total difference here? So $30,000 in the insurance premium. Oh, sorry, excuse me. The actual differences were down here. So this is the variance between the two. So we're talking about purchase price $180,000 less, right? Down payments 18 grand less to arguably buy the same house. We're talking about a mortgage that's now $165,000 different to start. The total insurance premium you're paying $6,600 less. And sure, the argument is going to say, well, clearly, or surely with a higher interest rate, my mortgage payment is going to be the same or higher. Well, no, it's actually in reality with these situations, we're talking about $85 less per month. That's assuming you don't readjust accordingly for the down payment. That's assuming you put down the least amount as you did in March and the least amount you can now. But again, if you take that full down payment you had in March and you put it against today's purchase price, these numbers all improve. So there's a lot of negativity out of there, and there's a lot of individuals who have kind of sat back because they're afraid of, I was saying a few weeks ago, in March it was the fear of missing out, and now it's the fear of overpaying. I think right now there's an opportunity to consider for first time buyers, for first time investors. You look at these numbers and you say, there's a lot of wiggle room here. We should be considering talking to somebody such as myself or your banker or whoever you deal with, and your realtor, of course, and start putting together a plan. Because I think as rates come down again and things kind of go back to a normality, more interested parties start coming out, and that's where prices come back up. So where there continues to be some fear in terms of transacting, that's usually where there's some opportunity. So I'd love to chat with you. Please reach out with any questions at all. The nice thing about working as a mortgage agent is because I'm here. I'm here for your discussion. I'm here for assisting you with long-term strategies or short-term strategies or anywhere in between. So please reach out. Don't hesitate to contact me at any time. If any of this doesn't really make any sense or you need clarification, that's what I'm here for. Talk soon. Have a great rest of your week. Hopefully the snow holds off a little bit. I know some people really love it, but I'm not quite there yet. And we will talk soon.